Hi guys, welcome back to accounting. I wanted to go over today the chapter 13 guided practice work together assignments. So let's start right out with 13-1. Today we're going to be we talked about payroll in chapter 12 and how we compute the payroll and how we pay the employees. And as we did that, we found out that there were a lot of taxes, and we withhold them from the employees and they become payables when we withhold them. So even though we're not paying the employees that section of the payroll, we will have to pay it eventually to the government or they get kind of mad. So let's talk about how that happens. All right, so in the first part of 13-1, we're going to look at a few things here. We're going to look at the employees' total earnings, all the taxes that we withheld, and as opposed to the check that we actually wrote out for all this payroll, which will be cash. We got to remember once again that the total earnings, that's what they earned, but that is not what we pay them. What we pay them is those earnings minus the taxes. Okay, so the first part's real easy. Total earnings is salary expense, and expenses are debits, so we're going to put that in here. Back to the little T accounts here. All right, the federal income tax, Social Security tax, and Medicare, we withheld them, but we are going to have to pay them later. They are payables. Okay, so the employee federal income tax withheld is $925. The Social Security is $855.60. Payables are credits, as you remember. And the Medicare is $200.10. But we're not done. How much cash did we actually come out of pocket and pay these employees? Well, the answer is what I just talked about before. We have to take that $13,800 that they earned and subtract the $925, subtract $855.60, and subtract $210 because we haven't paid that yet. And that will be the amount of check that we paid them. And if you should do the subtraction there, your answer is $11,819.30. When we pay cash, it's a credit. Hopefully we still remember that much. All right, let's go ahead and grade step 1. And of course, everything's perfect here. Okay, now we're going to go to the next step. The next step is our cash payments journal. Okay, and it goes through all the different T accounts and how we're going to have to put that in the cash payments journal. So I'm going to unhook this here. Okay, so the directions, let me hook this back up again. The directions tell us that we're going to record the May 15th. So it's May 15th payroll. So we're going to start out with a salary expense. Okay. So we're looking at the amount of the check because we're going to do cash credit here. And remember, the amount of the check was their earnings minus all the deductions. So that's $11,819.30. Okay, that's what we actually cut the check for. But the reality is our salary expense, if we look up in here, was $13,800 because we had all those taxes and stuff. So $13,800 goes here. Of course, those don't equal, and the reason they don't equal is because we have to put, oh, I forgot the check number in here. It's 564. Tells us right here. Okay, whoops, put it in the wrong spot. One thing's consistent, Miss Clark can type things in wrong whether I'm in class or at home. All right, so what we've got to account to is the difference between these two amounts, which is all our taxes. So we're going to go through there and say employee income tax payable. I'll go up here and see what that was. That was $925. And if you remember, that was a credit because it's payable. Okay. The next one is going to be Social Security tax payable. Also a credit. That was $855.60. And then lastly, we have Medicare tax payable. And I just happen to remember that was $200.10. If we do the math here and we take the debits and subtract all the credits, they will equal out. That's very important. Our debits and credits have to equal each other out. We'll grade this step. And we are good to go. Thanks for watching. Stay tuned. 13-2 is up next.